Hello again and welcome to the next video in my series. The last one that I did was on China, and I said I was going to do one on China and gold, and this is the one that I promised you. Now, I believe that the accumulation of gold is as a potential bulwark against fiat currencies is admirable in one way, but it's a folly in another. And in particular, China is committing, in my view, an incredibly stupid economic mistake by thinking that somehow accumulating as much gold as it is doing, it's somehow going to potentially take over the reserve currency status from the United States. But as you go further into analysis, and certainly as we go further into this video, you will see that I don't believe, at least that's my hypothesis, that I don't believe that China's really trying to take over the hegemony of reserve currency status, and you'll see certainly after this video why. Now, when we talk about gold, a lot of people confuse gold, in my view, as an investment. And it technically is not an investment. It's a store of value, and it becomes much more value in times of economic uncertainty, whether those periods are inflationary or deflationary. To give you an example, between 1974 and 1981, gold pretty well appreciated about approximately 50% year on year. So it went from about $50 in 1972 to about close to $500 just before 1981. So that was quite a climb, and it subsequently, in times of deflation, and the most notably recent one, in times of the Great Recession, 2008-2009, it declined from approximately $1,000 an ounce to $750 an ounce. So it's more mirrored what happens in economic circumstances, in inflation and in deflation, than it has as a store of value. Now let me make an example of this. I've picked a nominal year of 1974 to examine, for example, the property prices in the United Kingdom as opposed to an ounce of gold, or the value of gold. In 1974, a house in the United Kingdom was approximately $16,000, and an ounce of gold was $183, and so that meant it took 89 ounces of gold to buy a house, a standard 3-bedroom house in the United Kingdom. Now, if we fast forward that to 2018, where gold is $1,220 an ounce in December, and the average price of a UK house in dollars is $281,000, we can see that ratio has climbed to 230 times. So effectively, if you were holding long-term onto housing or real estate in the United Kingdom, you'd have been 250% better off than if you'd bought 89 ounces of gold back in 1974. So this obviously for stocks and shares it's a bit different, because there are periods when gold is more and gold is less, because stock markets are much more volatile than real estate has been historically, although not exclusively. So what we're trying to say is that yes, I do believe that gold is a store of value, but it's not realistic to look at gold as a reserve currency. And one of the reasons for this is that there just isn't enough gold in existence to back global growth, period. There just isn't enough. If you take, say, for example, if what we estimate China may have 15,000 tons or possibly slightly more, the United States 8,000 tons, and we start looking at all the amount of money, then there just isn't enough money for the trillions upon trillions of debt and assets that are existent in the world today. So if we were to go back to a gold standard that existed prior to 1972, what we'd find is a massive reset where countries could not proliferate the availability of credit on a widespread basis. That's been current since 1972. And I know a lot of people are saying, well, it's destroyed currency and we could have done that. There are reasons why the United States went off the gold standard, and I'll go into that a bit later in the video. And so, to me, historically, it's untenable. We cannot go back to a gold standard. So there are other reasons why countries like China and India are buying gold. Now, I believe that, as I said, China's accumulation of vast reserves of gold is folly. Now, let's look at some figures. As I said just a few minutes ago, that I believe China has anywhere from 15,000 to 20,000 tons of gold. This equates to nearly 470 million ounces, and in today's value at 12.20 an ounce, we're looking at about $562 billion of dollars. And that works out at $440 per person. Now, if we look correspondingly at the United States, they have declared about $8 billion. Now, whether or not the gold is actually there or not in Fort Knox is beyond the realm of this video, and it's more in the realm of conspiracy theory side of things. But let's assume that when the Americans say they've got 8,000 tons, they have that for argument's sake. So that's 250 million ounces. That's 300 with 330 million people, and that's 305 billion, which works out at $924 per person. So it's more or less twice that of the Chinese. So therefore, for the Chinese government to equate the same value of gold to what the Americans hold, they'd need to double their reserves, and or the price of gold would need to double, but there again, so would the value of the holdings of the US government. So the US is slightly ahead as far as the amount of gold per person is concerned. So what's disadvantaging China is it's got a much larger population. Now, to further analyse this, why I believe that China is not going towards a reserve currency, and also why gold is a bit of a folly. The average wage of an employee in China is $4,755 according to CNN recent research. That means the gold held per person, there needs to be 10 times the amount of gold held per person to equate the annual take of a person's salary. So why am I bothering with this calculation? Well, that is the amount of a factor that gold would have to at least equate to, in my view, to completely remove the idea of a fiat currency. So gold would have a long way to appreciate in terms of that. Now, as I said, what gold would do, or what going back to a gold standard, would completely compress and just devolve the whole idea of being able to use the government, as for want of a better term, of a printing press, to expand an economy. And we can see that the real danger in the United States has been, and the world has been, an over-reliance on credit, and a large part of this has been the fiat currencies. We still haven't got an alternative at the moment to replace it. And this is one of the dilemmas that the modern economic world faces. But going back to a gold standard is not the answer in my view. But as again, it's a store of value. So why buy so much gold? Well, the reason why the Chinese are buying so much gold, in my opinion, it's to keep the Chinese renminbi from collapsing, because there's so much debt in the Chinese system. I mean, basically, there's $34 trillion worth of private and public debt in the Chinese economy. So they're just, if we look at the 506 billion that we've worked out in the Chinese reserves, there just isn't enough money to, in my view, adequately then make China a reserve currency nation, because they've got so much overhanging debt in the first place. And because they've got this overhanging debt, and it's been correlated by Bloomberg in 2018, because they've got so much debt, it's not a good foundation to actually have a reserve currency. And yes, they've got reserves overseas, but so has America, so have European countries. So it just doesn't hold water with me. But because there is so much debt in China, what the government has to do is say to its people, hey guys, we've got 15,000, 20,000 tons of gold. We can guarantee our currency. We're not worried about the rest of the world. We don't have any sovereign debt issues. We're a net creditor for many countries, etc. like that. But when the housing crisis comes in China, it's going to be very important for them to say to their people, look, we've got resources, we've got, we've got gold, we've got plenty of it. So to me, this is a method where the Chinese are basically saying, we're going to support our currency, only our currency, and the rest of the world, they're on their own basically. So those countries with gold reserves are going to be in a much better position to back their own currencies, but not necessarily make them reserve currencies. So when we look at the coverage that one would need, say for example, from China, from the debt of 34 trillion to the 509 billion in gold holdings, you'd need a multiple of 59 times the value of gold to equate to that. So in other words, gold would have to go to $70,000 an ounce. I can't see gold going to $70,000 an ounce, no matter what gold buffs tell you. So that's just not going to happen. Now, for the reasons that I've said before, China is not going to assume reserve currency status. One of the reasons why is that when America was on the gold standard in the 1970s, what we saw is that there was inflationary crisis, there was more importantly there was the Vietnam War going on, and the American government was short of money. But what was happening was that foreign creditors were demanding gold instead of dollars. So the Americans found that their gold reserves were starting to be depleted because being the reserve currency and being backed by gold, there were demands on the actual physical gold quantities that the Americans had. And this is the problem with having a gold standard and having reserve currency status, that once you do that, then you're opening the doors to other traders, people who trade with your countries as well, of basically demanding gold. So in other words, the Chinese gold that they have amassed over the past 10, 15 years would quickly be liquidated, and the Chinese don't want that. So it doesn't suit them to have a reserve currency status. So that's my theory, that basically this is purely and simply to assuage the fears of the Chinese once this crash, this absolutely massive crash that I predict that will happen in China in the domestic economy. So the other thing as well is that one has to be aware, and certainly as far as investment is concerned, and one of the reasons why America, as I alluded to earlier in the video, America is very coy about, and Americans are very coy about saying how much gold they have, is because back in the 1930s, Hoover confiscated most of the gold that Americans held. Now, they held in 1932 $1.4 billion worth, and by 1934 the US government had confiscated 1.2 billion of that, leaving about, I think it was about 287 billion. So if you think your gold is safe in your own private hands, think again, because governments will and can confiscate them when a crisis occurs. And this is certainly going to happen in China as well, because it's estimated that the Chinese people have between 15 and 20,000 tons themselves, basically, as far as private holdings are concerned. So gold confiscation does occur. So therefore, as a store of value, it's worthwhile, but to put all your wealth in gold, no, it's a real mistake. So therefore, if it's a real mistake in the private sector, it's also a real mistake in the public sector. So the dilemma for the West is, and the dilemma for the current economies is, that all economies are based on a fiat system. When the fiat system breaks down, in my thesis and in my hypothesis, those countries with the most resources are those ones that are going to survive the crisis. Because, say for example, America is completely self-sufficient in resources. It can close its borders and survive. Russia can do the same. Some countries in Europe can do the same, but China can't. So it's necessary for China to have the gold. So there may be a revaluation on the ability of a country to use its own resources and therefore keep some sort of fiat alive. And certainly, to my view, the IMF is not going to be able to replace a fiat with a fiat, because the Americans are the main contributors to the IMF, and if they can't do it, well, what use is the IMF in backing any currency? So what does this mean as far as investments are concerned? Well, it's quite simple. Gold will always remain a store of value. Precious metals will always remain a store of value. But don't overbalance your portfolio with precious metals, because in times of inflation, deflation, they do store value, but they're not necessarily the best investment long term. So you must have a flexible portfolio, and you must keep an eye on what's happening with governments accumulating reserves of precious metals, because scarcity is in itself a determination of value. But it's certainly something to look out for. So I do believe that the Chinese accumulation is a folly on gold, and it will have disastrous consequences for them in the long term, in my view. Thank you for your time. Very much appreciated. Please subscribe, please like the button, and I'll see you in the next video. Thank you, and bye.